Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market. In current weekly research, we have taken a look on the big picture of the gold market, and we have come to the conclusion that in general the bearish setup that exists on the gold market already for a considerable period of time has not disappeared, and it still exists, but it was a bit disguised by contraction of the short positions and the poor non-farm payrolls release that we've got on Friday. What does it mean? It means that the bearish action that we could see previously on the gold market probably will be postponed or paused for some period until market will show the reaction on non-farm payrolls release. Because we have checked the recent commitment of traders report that stands for 31st of the March, and it shows strong contraction of the bearish positions. So speculators have closed a lot of bearish short positions, and the open interest has contracted significantly. That was right at the eve of the ADP report, and as we know, it also was negative. But at the same time, commitment of traders report doesn't show any increase in the longs position. So the longs positions remains on the lowest levels, and they were not contracted, but they also were not increased. And it means that we do not see any real drastic shift in the sentiment. Market remains bearish, but the degree of the bearishness have decreased slightly because market has closed most investors have closed some positions. And when the question where market will return right back to the downward action now depends on how fast and when the market participants will reestablish and restore the short positions that they have closed on the previous week. That's mostly a technical question. But until this will happen, market could show the really significant upward retracement. That for us is very important because we mostly trade on the daily time frame chart. And maybe on the monthly and weekly market hasn't shown any significant changes, and that the patterns that we have discussed previously on the weekly and monthly chart are still exist. But on the daily chart, the retracement could be significant. At the same time, if even market will reach the extended target, the ultimate target of this retracement, for example, if we suggest just theoretically that market will reach A, B, C, bottom 1618 extension and 13 area, it will not break the bearish trend that we have on the monthly and weekly chart, because to break the bearish situation, bearish sentiment, market should break the tendency of the lower highs creation that indicates right now the bearish dynamic pressure on the monthly chart. But to that purpose, market should move above the 1350 area. And that's really significant challenge, significant action. And right now we do not see any reasons for such sort of the appreciation. Even the one poor report can't trigger such sort of the action. And that is that could be proven by the CFTC report. So yes, the short positions have been closed, but no long positions have been opened. That's really not significant. So upward action mostly was driven by the closing of the positions, but we do not see any new inflow of the bullish positions that could push market high. To push market high, investors should buy gold, but they do not do this. They just close the positions. That's why current action, it proves us that current action is just a retracement, and we should treat it correspondingly. The most probable target of this retracement, as we see, is probably this 1250 area. That's the equal AB equals CD pattern that could be reached, but not probably on the common week, maybe within a couple of weeks that could happen. Still, this is also significant for us because it in general supports our idea of the compounded retracement, that market could show really two-leg retracement to the upside. In recent data, that's the shift in the CFTC positions, negative non-farm payrolls release. All this support the idea that market really could show the compounded retracement. So on the short-term perspective, our trading plan suggests a couple of steps. The first step, that on Monday or at the beginning of the week, market probably will reach this area. We will not be surprised if we will see the gap up here, right around this area, because that's the first destination point of this retracement. That is the monthly pivot resistance. 618 minor extension of that ABCD pattern. That's probably also the 50% resistance fib level. And take a look, it's also significant daily overbought. So market probably will stick here for some time, and maybe even we will see some sort of the retracement down. That will be the second step of it, retracement, respect this retracement or respect to this resistance, and probably some retracement right back down as the response on this level. And after that, market really could continue to move high. That's our trading plan in the gold market. On the 4-hour time frame chart, you could see, but that probably we have discussed on Friday, that this upward action could take the shape of the butterfly, because butterfly has the targets 20-30 area. It's almost at the same area as daily overbought stands, 20-30. So I will not be surprised the market will take the shape of the butterfly. The existence of the butterfly also suggests that at least minor 3-8 retracement of this most recent swing should happen as a response of this reaching of this resistance. That's our trading plan. After that, we think that it really could happen that market will continue to move high with this ABCD. It will depend on the impulse action to the upside. If it will be really fast, the chances on reaching of this level will increase, and also it will depend on how fast investors will reestablish bearish positions. If it will be not very soon, then probably the market could creep higher for some time more. But if it will start to reestablish the short position faster, this retracement could end also really fast. And reaction will be equal to the counter reaction. So that's the counter reaction in the closing of the shorts. This reaction of the reestablishing of the shorts also will be really significant. And I will not be surprised if even we will get some kind of the butterfly here to the downside on the weekly chart. So I mean, not this one, I mean this one. Okay. So if we will get the compounding retracement here, where I'm talking about the 13 area, this market will show this deep retracement. This will not break the tendency, will not break this top. Market will keep chance on the downward continuation. So let's see what will happen. But on the common week, we will be watching for a couple of moments. It's reaching this area and retracement. This probably will last for a whole week, this action.